Welcome to the Wealth Studying Podcast. This is episode 497. Today is October 21st, 2025. I'm your host, John Pugliano. I'm also the founder and money manager at investablewealth.com. Well, hey, got a quick episode for you, and it comes from a listener question. For our purposes, we're going to call our listener Fred. Now, Fred wants to know why he consistently makes bad investments. Because he's heard me say that if you have an investment horizon that's, 3 to 5 years, then generally you're going to do pretty well in the stock market. And he's been in the market well over 5 years, and he keeps losing money. So I asked him to explain what he's been invested in. Here's what he said. At the start of the pandemic, he was basically fully in the market. He saw the market dropping. He panicked. He sold, and he went into bonds. He bought bonds. Well, actually, he bought bond funds, just to clarify. He bought government and corporate bond funds because he was told by an advisor that bonds are safe. Well, that's another one of those myths on Wall Street. There are no safe investments, bonds included. Bond principal value, or the price of a bond ETF, is inversely proportional to interest rates. And so while a lot of people over the last 40 years, pretty much since, the 1980s, as interest rates have continually come down prior to the pandemic, then people would collect the yield of the bond and then also generally see an appreciation of their bond value because interest rates were coming down. Well, that's all changed. We're in a total different interest rate environment now, especially following the pandemic when Fred went into it. And because bond prices are inversely proportional to the yield, that means that his price went down and he lost money in bonds. So he sat in bonds, continuing to lose money for pretty much all the way through 2023. And I don't know specifically how much he lost, but just to give you an idea, I'm looking at a chart of TLT, which is the 20-year government treasury ETF. And over the last 5 years, it's down more than 42%. So yeah, if you went into bonds immediately or right after the pandemic, you probably lost a lot of money. In any case, Fred did. And so here it is, sometime in 2023, there's all this talk about a recession. Fred has lost money in what he thinks was a safe investment, bonds, and so he sells all of his bonds. He takes a loss on that. He goes into cash. He sits into cash pretty much throughout the year 2024. And sometime around, late fourth quarter 2024, maybe even into early 2025, he sees everybody's making money in crypto, and so he jumps into Bitcoin. Well, Bitcoin's been a little turbulent over the last couple weeks, and, Fred's timing is immaculate. He literally sells his Bitcoin pretty much at the same price he bought it for back in whenever it was, December of 2024. So didn't lose money there, but he also didn't make any money. And that's even though Bitcoin has gone up, extremely well, he just didn't time it properly. Hey, but it gets worse. Guess what he does? A couple weeks ago, when he sells his Bitcoin, what's he do? He piles into gold. And to me, I can't predict the future, but it looks like gold is rolling over, certainly maybe as top for a little while. I don't know if that's the case, but if it is, and you look at gold, oftentimes that gold cycle can last not only years, but a decade. And so, we'll have to see how it plays out for Fred, but I don't think this last investment into gold is going to be much more of a money-making proposition than anything else he's done over the last 5 years or so. But the point being, it's not just about being in the stock market or in any market. It's about being diversified, and it's also about being consistent. Now, I move in and out of the market. I'm sitting on more than 20% cash right now. During 2023, I was pretty much 100% in cash. So yeah, I do move in and out of things. I'm not trying to time the market perfectly. I very infrequently have ever bought exactly at the bottom and sold at the top. But I've made plenty of money in between. The thing about Fred is that he keeps switching horses. What's the old expression? Changing horses in the middle of the stream? He goes from bonds to cash to Bitcoin to gold. Again, hey, I'm all about stock picking. I own, well over 130 different stocks, but I don't go from one extreme to another. And I see people do this all the time, even just with money managers. They'll hire an advisor and stick with him for 18 or 24 months. They're not happy with that. They switch to another guy that has a different strategy, and just on and on. And they do that for 10 years. They still don't make any money. Generally, every investment approach works if it's given time. Go to the library or section of Amazon or whatever and look for investing books. You will see thousands of books written by millionaires and billionaires describing their technique for how they made money. And most of them aren't lying. They're telling the truth. But just because you go buy that book and apply that one technique, it doesn't mean it's going to make you rich, because maybe times have changed since that book was written. Or at least it's out of cycle. Now, again, if you stick with it long enough, the cycle will come back, and yeah, you'll probably do okay and make money. But you have to have somewhat of a consistent approach. The other thing about being in the market, just because you're in 3 or 5 years, that doesn't change the odds of tomorrow being a bad event for the stock market. Meaning the market could have a black swan event and go into a bear cycle, or it could just go through a normal 10% correction. It's like flipping a coin. Let's say you flip a quarter and the last 4 tosses in a row you get heads. Well, your next toss, the odds of getting a tail or a head are still 50-50. Doesn't matter how many you've had in a row. It's just that over time, the odds are 50-50 that you're going to get a head or a tail. The market's much like that. The market generally goes up. If you look at the S&P 500 over the last, generation or so, it averages about 60 basis point increase every month. So, you're talking a good 7% or so a year. But that doesn't mean you're going to make 7% this year, because the market could go up 25, or it could also go down 30. It's just on average. But even with that average, every given day, the market is more than 50% likely to go up. So yes, if you stick with this strategy, and even if that strategy is moving in and out of the market, if you're doing a consistent, rational approach, then having a long-term aspect on the market, say, at least 3 to 5 years, you're probably going to come out ahead by investing properly. And that even includes people that are in retirement age, because they're like, well, I don't have 5 years left. I'm going to be retired next year. Well, no, you're missing the point. Just like that coin toss is 50-50 either way, just because you need to draw down on your investments now because you're in retirement doesn't mean you're taking 100% of your money out every year. I mean, think about it. If you're going by a traditional Wall Street drawdown of, say, it's generally 4 to 6%, but just call it 5% to keep the math simple. If you're taking out 5% a year to supplement your Social Security and to pay for your living expenses, then if you sit aside 15 to 20% in a very liquid and low beta, stable type investment, something even just as simple as a money market fund, then you're talking about having 3 to 4 years of retirement income that's readily available and is not going to vary much, if at all, in its nominal price. And that's just committing 15 to 20% of your overall portfolio. That means that, at least 80% of your portfolio can be invested with a longer horizon, and therefore taking more risk and growing at a better rate than that, quote, safe money. In any case, I went longer than I wanted to today. Hey, bottom line, don't be like Fred. Don't chase headlines. Don't try and chase performance. Don't let fear or greed dominate your investment strategy. Well, hey, until next time, as always, this is John Pugliano wishing you the very best returns.